Hi, it's Steve from Snap here to share how you can add the new First Home Savings account to your projections. We're going to be using a sample projection for John Snapper. We're going to begin the plan in 2024 when he's set to turn age 32. He has a few existing investments, including his tax-free savings, registered retirement savings plan, and a First Home Savings account that we'll be adding shortly. He's looking to purchase his first home as of 2029 when he turns 37 for a total purchase price of $500,000. He'll be financing that through a combination of a new mortgage and a withdrawal from the First Home Savings account that we'll show shortly. We can add the account to the plan by going to Scenario Setup and then Assets. We'll click Add Capital Asset and then we can input the information for the account. We made a contribution in 2023 for $8,000, so we'll start the plan as of January 1st, 2024 with that balance already invested. We'll select First Home Savings account and we'll enter in 100% asset allocation to fixed income products. We can then click on the First Home Savings Account tab to customize some of the settings that are helpful for calculations throughout the software. The first field is related to the year that the client opened their first FHSA. This helps us to calculate things like the 15th anniversary to know when the accounts need to be closed. It also helps us to determine whether there may be carry forward room from a previous year or previous contributions that would reduce the client's maximum from the $40,000 value. In this case, we have no carry forward room, so we'll leave this as 0, but we have made previous contributions of $8,000, so we'll update that cell. If you add a first home as a real asset in the projection with a future purchase age, you can model the use of the First Home Savings account balance to be withdrawn as a qualifying withdrawal towards the purchase of that property. So by selecting the home in this dropdown, Snap will automatically use the remaining balance of the First Home Savings account to make the purchase. Now that we're done setting up these various inputs, we can go to the planning pages in order to make our contributions. As we continue to the right, we can see the relevant columns for the First Home Savings account. There's contributions, qualifying withdrawals, and then if appropriate, non-qualifying withdrawals. If I hover my mouse over top of the contribution value in any year, I can see how much room is assumed to be available. So if I don't make a contribution in 2024, we can see that Snap has determined there would be $16,000 available as of 2025. In this case, I'm going to model $8,000 contributions for the next 4 years, copying that down until age 35. Now, if you wanted to, you could always copy this all the way down and Snap will stop you once you've reached the maximum $40,000 value. But for our purposes, I'm just going to show these additional 4 years. We can see the balance of the account reaches roughly $42,500, and then Snap automatically makes a qualifying withdrawal as of the year of the property purchase and uses that money towards the needed cash flow. If there was still a balance remaining at the end of the account's lifetime, either because it's being closed due to the 15th anniversary or any other reason, the software would automatically make a non-qualifying withdrawal as of that year of the account closure. The contributions that we're making to the account are able to reduce our client's taxable income and therefore their taxes payable. If we click on the taxable income details table, we can see the total employment income of $120,000 in the first year. Our $8,000 contribution is reducing that value, so we're only being charged on $112,000 of total taxable income. If we come back to the First Home Savings account, we can see that the information related to the account can be seen throughout the software in different ways. In most cases, you'll be able to see a dedicated column for the First Home Savings account information. So here on the planning page, if we collapse the capital asset section, we'll see that itemized explicitly. Similarly, if we go to the client report and down to the cash flow summary, we can see that the First Home Savings account has been automatically itemized for us. In a few cases throughout the software, for instance, on the net worth chart, we have several account types categorized all under registered. So in this case, the First Home Savings account balance would be added to the registered retirement savings plan, DCPP, and so forth, and categorized under the registered type. If you're looking to learn more information about contributions, withdrawals, rollovers, or anything else related to the First Home Savings Account, you can access that information by going to our help site, clicking on Help Center, going to the What's New section, and then clicking on the First Home Savings Account article. Here we break out in more detail the different calculations, assumptions, and settings available in the software, and we also link to government resources to learn more about the First Home Savings Account and information that you might need for client conversations. We hope that you enjoy the new functionality. If you do have any questions or feedback, please let us know, and we hope you have a great day.